Good morning. It's the 12th of November. It's around about 8:30 in the morning, and I thought I would do a short video to explain how the previous study 4 messed up and how this one is going slightly better. The 4 EAs that I'm running, there's 2 on a 4-hourly time frame, 2 on a daily time frame, 1 without filters, 1 with filters, 1 without filters, 1 with filters. The modifier is set at 1.75, and the starting balances for the demo accounts, one demo account was 7,428, and the other demo account 10,328. Right, now I'll try to explain what happened with the previous study. What we've got here in front of us is one of the trades that's been triggered by the study 4 EA, and the mauve line, or sort of what would you call that, lilac. That lilac line is where the stop loss had been placed previously, because on my original study 4 I had the stop and target set to 1, and the problem was that the stop was just too close to price. So if I pull it down now, you can see where the stop is now set for this study, but that's where it would have been set previously. So you can see that the trade would have been stopped out at this point here. Now, another trade that's actually running right now is the Aussie Yen, and we got similar situation. Hang on, let's get the Aussie Yen in here. So similar situation. There's the Aussie Yen trade triggered at this point here. The stop loss would have been placed there. The trade would have lost, and where the stop loss is right now is up there. So it's giving the trade room to breathe. The next one, Aussie dollar USD. So exactly the same situation. The trade's triggered there. It takes a bit of time for the reversion algo to get back into swing, and you can see it's now in profit. But had the stop loss been placed there, the trade would have been stopped out for a loss. The next one is CAS Swiss. So this one would have been okay. This one didn't quite reach the stop loss that it would have been set at, so it turned around, and that one would have been okay. CAD Yen. CAD Yen would have been stopped out. There's the opening. There's where the stop loss would have been, and it would have been knocked out. Euro NZD. Right, so the euro New Zealand dollar, again exactly the same thing. Where the stop loss would have been placed, it would have been stopped out. Whereas where the stop loss is right now, it's allowed the trade time to breathe, and it's allowed the reversion algo to do what it does best, which is to reverse. Then what we got, pound Swiss, is it? So pound Swiss would have been okay. The stop loss would have been placed there, so it would have turned around okay. And what are we on? Pound yen. Pound yen would have been okay. Stop loss would have just managed to keep the trade in. New Zealand dollar, Japanese yen. That would have been stopped out. Exactly, see where the stop loss would have been. And the last one that's currently running is the New Zealand dollar, US dollar. So again, another trade that would have been stopped out. So of all the 10 trades that are currently running, 6 of them, I think, or maybe even 7 of them, would have been stopped out. And what, of course, would have happened is the EA would then open 7 new trades. They would get stopped out. They open another 7 trades. They get stopped out. And you've got a disastrous loss on your hand. Whereas now, by allowing the stops much higher stops, allowing the trade time to breathe, all the trades are actually currently in profit, and you can see that the profit is running around about the sort of £35 to £38 mark. So anyway, that's the short video just to explain what had gone wrong on study 4 previously, and how hopefully the situation is rectified. There's still been no trades on the daily or the trades where there are filters, but at least this is a start.